On August 3, 2024, CNBC published an article titled "Warren Buffett's Berkshire Hathaway sold nearly half its stake in Apple." This news caused enormous surprise due to Buffett's long-standing reputation as a buy-and-hold investor and his prior praise of Apple as one of Berkshire's four giants.
Apple shares continuing to slide following Warren Buffett and Berkshire Hathaway slashing its Apple stake by about half.
After the news broke, Apple stock took a 5% dive. Now experts were wondering if there was a bigger underlying reason for the sale. Buffett himself explained that the reason was tax purpose, but many were not buying it. But the company had not just been dumping Apple stock. In 2024, Warren Buffett's Berkshire Hathaway significantly reduced its stock holdings across multiple companies, with total net sales amounting to approximately $134 billion. This is a huge anomaly, since the company has never sold more than $25 billion in any calendar year. By the end of 2024, the company was holding a staggering $334.2 billion in cash reserves, eclipsing all of their marketable equities that had a value of $272 billion. So why did Warren sell? This unanswered question led some to speculate that something was not right with the US stock market. The American stock market has for a long time played an outsized role in the US economy. By the late 19th and 20th centuries, the stock market started to play a big role when it became an important way for companies like Standard Oil, US Steel, and General Electric to raise huge amounts of money. By the 1920s, the public started to invest more and more in the market. And it was at this time that the dark side of the stock market would first show its ugly head, when the stock market crashed in 1929. The crash was huge, wiping out about $30 billion in market value, equivalent to roughly $500 billion in today's money within weeks. Over 9,000 banks collapsed between 1930 and 1933 as panicked depositors withdrew savings and banks couldn't recover loans tied to the stock market. Industrial production fell by 47%, and unemployment soared from 3% in 1929 to 25% at its peak. Thousands of companies went bankrupt due to reduced consumer spending and credit shortages. GDP dropped from $104 billion in 1929 to $57 billion in 1933. This led to consequences around the whole world, as the 1929 Wall Street crash acted as a catalyst that deepened Germany's economic woes and accelerated the decline of the Weimar Republic, paving the way for the rise of the Third Reich and the Second World War. But before the crash, there were those that warned that this was coming. Among these were the economist Roger Babson that said, "Sooner or later, a crash is coming, and it may be terrific." To be clear, Warren Buffett has not recently made any public statement about the looming crash. But if we go back a bit to 2014, he did make a warning. That year, he said that if the ratio of the total market capitalization to the total dollar value of the nation's GDP is over 100%, it is time to be wary about common stocks. In 1929, this ratio was 81% of GDP. During the dot-com bubble in the year 2000, it was 183% of GDP. In 2007, it was 135% of GDP, just before the housing market crash. Today, this indicator, that has now become known as the Buffett indicator, stands at over 200%. But Buffett is far from the only billionaire that has been selling. In 2020, Elon Musk tweeted that Tesla's stock price was too high, causing a 13% drop in its stock price. And in 2022, he sold $7.5 billion in Tesla stock, sparking allegations of insider trading. In 2024, Jeff Bezos sold $13 billion in Amazon stocks. Mark Zuckerberg sold $2 billion in 2024. But when looking at the MSCI index, a common index used by many investors, US stocks are not only high relative to the US economy, but they are high compared to the rest of the world. According to their charts, the US represents over 65% of the value of world stocks. As an example of this, a company like Tesla has a market cap 4 times bigger than Toyota, even though Toyota sold 5 times more cars than Tesla in 2024. To be fair, Tesla has a better profit margin than many other car companies, but it seems hard to understand that the difference should be this large. But some say that the stock price is justified because of the nature of the companies that are experiencing the high stock market price, namely tech and AI-related companies. This is an argument that claims that the future economy will be built by chip companies like Nvidia and AI companies like OpenAI, Microsoft, and Google. And perhaps this argument would have been convincing to many, as the US tech companies were believed to have a big head start over the rest of the world. But then came DeepSeek. The Chinese AI company caused a bloodbath in the US tech sector, wiping out close to $1 trillion. The Chinese AI model was released for free, and to make things worse, was only trained on $6 million, making the case that the productivity gains from AI do not need the huge investments that Silicon Valley was claiming. To be clear, Warren Buffett has not only sold tech stocks, but also stocks like Bank of America and Paramount Global. But many of them were tech stocks like Apple, HP, and Snowflake. But regardless, this is a historic sell for Berkshire, and what is surprising many people is that Warren has not used the cash to buy back Berkshire stock, as he has done many times before, making some speculate that perhaps he thinks that his own stocks are overvalued. But that said, even if this is a sign of a coming crash, it is very hard to say when something like that would occur. In 1996, the chair of the US Fed, Alan Greenspan, warned of irrational exuberance in the stock market when the Buffett indicator was 86% of GDP. But over the next 4 years, the stock market kept rising until the 2000 dot-com crash. In 2024, the Financial Times published an article titled How the Mother of All Bubbles Will Pop, stating that all the classic signs of extreme prices, valuations, and sentiment suggest the end is near. It's time to bet against American exceptionalism. This is not financial advice, but what do you think? Would the stock market keep rising, or is this the biggest bubble in the history of the world? If you want to help our small channel, please consider subscribing and hitting the notifications icon. But the threat to the US tech sector is not just about possible market crashes, but also about competition. See how one Chinese company is threatening one of the biggest exports America has: electric cars.